Our guest thinks the Bank of Canada will be perfectly happy to keep rates unchanged this coming Wednesday. Let's get more now from Andrew Kelvin, head of Canadian and Global Rate Strategy at TD Securities. We got those strong job numbers this morning. You think that'll add to the Bank of Canada's conviction rates should stay unchanged?
I think they were already pretty comfortable with the idea that rates were at an appropriate level. That's something they had said in as many words in October, and since then the data had been mostly pretty decent. With that jobs number this morning, they will be extremely comfortable with the idea that they do not need to ease any further. And in fact, if you look at where markets are pricing the Bank of Canada here, after this morning's job number, markets are starting to expect actually the Bank of Canada to lift rates in the fourth quarter of next year.
Lift rates late in 2026.
I think that's a little bit early, but we do think that the next move will be higher, not lower. We see it as more of a 2027 story, but early in 2027. So I think really the story for the Bank of Canada here is that the Canadian economy is perhaps holding up a little bit better than some had feared under the onslaught of trade disruptions with the United States. Mm-hmm. And with fiscal stimulus on the way in 2026, we did have that somewhat expansive budget from the Liberals recently. We could see the Canadian economy perform a little bit better next year than they did this year.
Are we going to see a big wall of spending from Ottawa? I mean, it takes so long to get projects organized and approvals and all that.
That's really the big question here. If I had one thing that surprised me in that budget, it was the timing of the spending, not the amount of spending. That had been pretty well telegraphed that we were going to see increases of spending to the tune of 1% of GDP per year, which is not unreasonable. I was surprised how much they thought they can get out the door by March 31st.
Of next year.
Of next year, correct, by the end of this fiscal year. It's an open question. Like, that is sort of the big risk with fiscal stimulus, or one of the big risks. One question is how effectively can you spend the money? Can you get the money to the parts of the economy that actually helps it generate jobs and prosperity? Just for example, if you're spending money on defense, the part of that is imported isn't really helpful for GDP, and defense is a big line item. Mm-hmm. The other question is, can you get the money out the door? Canada has had issues in the past with procurement, and you can say that you're going to spend extra money on capital projects or something like defense, but if you can't actually line up the contracts, line up suppliers, get through planning processes efficiently enough, it does dent the impact. Nonetheless, we are comfortable with the idea that the government stimulus will be a net contributor to growth in 2026.
What kind of GDP growth are you expecting for Canada this year and next year? What's the range?
So if you look at this year, it's been extremely uneven. We had not a bad start to the year. It was sort of 2% Q1, dropped negative in Q2 very noticeably. Q3 was quite strong again. If you want to look at sort of the average quarterly growth rates for this year, you're probably going to be looking at something in the neighborhood, sort of between 0.5 and 1 percentage point on average.
On an annualized
basis, yes. Yeah. We are not all producing 1% more every quarter. Next year, we're thinking something in the range of sort of 1.5% annualized growth every quarter makes a lot of sense to us.
So certainly not gangbusters next year.
Not gangbusters, but it's pretty healthy in the context of population growth that's dramatically slowing. That was one of the things we saw in the budget. The government is really leaning into that change in course on immigration that the Trudeau government had sort of plotted late in its tenure there. So if we're going to talk real GDP growth of 1.5%, we're going to talk about zero population growth, like that is pretty healthy on a per capita basis.
Yeah. From a demographic point of view, though, should we be maintaining high levels of immigration? I know that's a very long-term question.
It is a long-term question. Given the sharp acceleration we saw in the sort of late pandemic years, early post-pandemic years, I think it's understandable the government perhaps feels like they need to slow things down to let sort of social capacity, physical infrastructure to catch up. Hospitals, houses, Build Canada homes is a big priority for this government. It's understandable we're taking a bit of a pause here, but if we want to start talking about even 2027, certainly 2028, 2029, we should be looking economically to have a growing population again, because the one thing we don't want to do is find ourselves 20 years down the road needlessly in a position like you see in Europe, like you see in a place like Japan, where you are now actually confronting very unfavorable demographics. Long-term, Canada's ability to grow its population is a positive thing, not a negative one.
It's amazing to me how the wealthy Asian economies, Taiwan, Singapore, Japan, I think South Korea, the birth rate has collapsed. Women in those countries are not having babies.
You see that the rich world over. That really is a thing that you see. You see it in Europe. You see it in Asia. You see it in countries as they go up through the economic spectrum.
It's a money thing, yeah.
As people become wealthier, as people have more ability to sort of plan and the choice of going to work becomes a little bit more appealing. People tend to choose to have smaller families in aggregate for reasons that I can't. It's really beyond me to figure out why.
It's an interesting
but
one,
it is something we observe sort of consistently across the world.
There is a school of thought, of course, the impossibility of finding a reasonably priced house is one reason people are holding off from having kids.
I think that's a pretty fair comment to make in certainly expensive parts of the world, including large Canadian cities. You don't tend to see that differentiation substantially between sort of the expensive parts of a country and the cheap parts of the country, however.
And so the big imponderable, of course, is renegotiation of the North American trade agreement. If US President Donald Trump goes ballistic, that could disrupt the economy, of course.
Absolutely. Yeah. I think one of the lessons of 2025 is that it's probably worth not overreacting to off-the-cuff, in-the-moment pronouncements around further deterioration in the Canada-U.S. trade relationship. It is a risk, absolutely. If you were to see another significant deterioration in our ability to trade with the United States, that would be a negative for the Canadian economy, unquestionably. Our base case is that we see no further deterioration in that relationship. I'm sure it will be noisy in the process of renegotiating USMCA. Like, that seems like a fairly comfortable assumption for us to make that at some point. There will be a headline that comes out that causes my blood pressure to spike and me to work a few evenings. But if you look at sort of the way the U.S. has approached Canada as a trading partner or a negotiating partner over this year, we still have the USMCA exemptions, which covers the vast majority of trade between Canada and the United States. I would be very, very surprised to see a U.S. administration of any stripe put tariffs on energy imports. Given affordability as a buzzword in the United States today, it would be very difficult for me to imagine a world where the U.S., in part of a trade action, decided to make Canadian oil more expensive or Canadian electricity more expensive.
Yeah. I mean, they have gone after steel and aluminum, but politicians often fetishize metals, I think. They can get their heads around them.
Well, and it's sort of the things that we're seeing as fundamental in building the post-war economy. Steel, smelters, autos, like those were the things that I think the notion of like middle-class prosperity in the 1960s context were built upon. And that seems to be very important in the current administration's thought process.
And maybe these days it's more just ensuring your kids are graduating with good math skills. That's more fundamental.
I think that's an important one too.
Andrew, thanks very much.
Thanks for having me. I appreciate it.
Andrew Kelvin, the head of Canadian and Global Rate Strategy at TD Securities.